Welcome back to the end of the week. This is the weekly close. We got a lot to talk about. S&P 5,000, Bitcoin back at 47,000. The Nikkei almost back to 1989 levels, currently 1990 levels. Plus tons of stuff. Don't want to forget about anything like some people, but you'll see all that today on I don't even know what I'm saying. I just gaffed just like him. Today's episode of Money Never Sleeps. Thank you for being here on the weekly close, joined by Mr. House once again. Before we get into anything, just a reminder that we are not financial advisors. Nothing we say is financial advice. We're just a couple of guys who love talking about the markets and sometimes making fools of ourselves when we try and do an impression of a sitting official. But other than that, do your own research and make sure that you do your own research before you make any financial decisions. It has to be said. House, glad to have you here on today's episode, closing out the week. You know, I think crypto is kind of the thing right now that's just been absolutely, taking everyone by not surprised, but I think it's definitely getting bullish sentiment out there, at least in the past few days. And it's really interesting when we look at these charts, like Bitcoin. It's been going up, but it's been going up in the past day or so. It hasn't necessarily been a week long thing. So I'm saying I think it's really interesting considering how sentiment was and how boring the price action was. But it seems to be between that and the S&P right now that are just absolutely taking everyone by bullish storm, I think.
Yeah, I mean, we hit a new local high, as far as Bitcoin goes, and I think this is, kind of following what we were discussing a little bit yesterday, where we regained that pre-ETF level, but we didn't. Sorry about my dog barking. Let me shut my office door real quick.
I thought you had a
We
boat in
didn't
there.
quite get to we didn't quite get to the top of where we had gotten, as a result of the ETF news. So I'm curious, we've started pulling back a little bit. Looks like we topped out just above 48K and now we're sitting around 47.5. So I'll be interested to see what happens from here. At least in my eyes, it looks like that kind of support resistance pocket is right around 47K, going down to low 46K. So yeah, I mean, I think this is a pretty interesting spot. We didn't quite hit that 49.50 range like you and I were thinking. So, maybe there's still room to go up, or maybe this is the beginning of a downfall. So yeah, I'll definitely be curious to watch the chart over the next week or two and see how the market reacts.
Absolutely. It's just really interesting seeing Bitcoin kind of rally here. And again, I think narrative driven at this point because if the top isn't in already, it will be soon, right? I think that's kind of the mindset we have to have because I do think that we're on the last legs of liquidity, just considering what's going on globally in terms of in the banking crisis, because the banking crisis is not getting better in the United States, but we've got news that it's even getting worse in places like Germany, which is not great for obviously Eurozone. That's going to definitely impact them. And then in China, we know what's going on in China, right? We're waiting for one central banker to essentially cut rates or raise them. That's why I brought up Japan as well, because someone's going to make a move that's going to force all the other central bankers to have to make the same move. But Bitcoin's price going up here. It's like even next week, or I think 2 weeks from now, 21st, 22nd of February, that's when CZ is going to be before a judge, right? That's another narrative that you have to kind of keep in mind. And, CZ, what does he want? Does he want to go to jail for 2 years? Does he want to go to jail for 18 years, right? I think there's going to be a lot of information that's going to be coming out regarding that. I think that's one last chance to push the market up, in this distribution zone. Kind of makes sense. The chart itself, very confusing. We'll get into that in a little bit later, but there's definitely some things that just don't necessarily make sense. And that's why I'm kind of thinking that, maybe we do have one more push up to see that liquidity, that transfer of wealth from people who don't want to be holding the asset because they know what's coming to people who are thinking that, no, man, the bottom is in. We're going to this is a new bull market right here. So I think that's gonna be really interesting to look at. I want to pull up the S&P right now because this is something that just couldn't get above 5,000. And yesterday we hit it and we went right back underneath it. But here we are today, well above 5,000 in the S&P. Everyone give a round of applause to the two stocks that pretty much got us here, NVIDIA and NVIDIA. And I'm just kidding, but it's pretty much seemed that way, right? It's been a really great run for the S&P since October. I mean, if we go back to the October lows, I want people to realize that in the short span of time that we've pretty much been in this market, that we've rallied roughly, 22% in the S&P. That's an amazing move in a matter of what? How many months? October, so November, December, January, like 4 months. 22%. That's amazing. That's like 5% per month, right? So it's crazy to see that we're here at this level, and I think a lot of people are thinking like, okay, you know, it keeps going higher. At some point, I don't want to be caught on the sidelines. And that's the dangerous thing right here, too, when we talk about the equity market, because yes, it's going up like crazy. There's no doubt that we are at all-time highs, but every time you do get to an all-time high, there's a reason why you have to wait till you get to an all-time high again, because there's a correction. And right now the markets are extremely greedy. I think the fear and greed index is at 78 today, 78, 79, somewhere around there. And we're seeing that there's just no signs of stopping. But let's look at the technicals real quick on the S&P. And I want to focus specifically on the S&P because I think the Nasdaq and the Dow are definitely going to see some negative price action. But I think the S&P is a little bit more flawed because the 493 other stocks that are in it are not weighted nearly as much as the top seven. And because of that, if those are having a bad day, index isn't really necessarily having a bad day itself. It's just something that we have to kind of remind ourselves. But looking at this here, and the stochastic RSI were at 91 and 82. Nothing bad happened in China last night, so I wouldn't anticipate there to be much volatility today. It just seems like they're buying into, the weekly close. All-time highs are above 5,000. It's kind of a trigger for some people. I think it's a psychological level for a lot of people who were buying down lower, but for people up here, I think it's a good idea for them to see that, and they're like, well, not a good idea, but they're probably seeing them be like, well, I didn't think it was going to get this high. It's going to keep going then, right? Of course it's going to, right? So it's definitely a psychological level, 5,000. So we're going to keep an eye on that. But stochastic RSI, it's going to be overbought by Monday's open. If we look at the week, let's take a look at the 3-day. I mean, the 3 days at 197, so that's completely overbought. Take a look at the weekly. Weekly's at 197, so overbought completely. Monthly, let's take a look at that one. 99 and 87, right? And these are all extremely close to being overbought. Can it stay overbought for a period of time? Absolutely. We know that it can. The interesting thing here is what happens if it's extremely overbought and we get into one of these crises. Liquidity, collateral, those are the big problems that we're facing right now. A lot of people are saying that U.S. Treasuries, there's not necessarily a lot of demand for them. And I think that that's kind of just a talking point that we're seeing on CNBC, Bloomberg, and all these places. But the treasuries are part of the issue with collateral, right? So when these banks don't have any treasuries on hand, they have to find some way of getting capital. Obviously, they swap with the Fed treasuries for cash, and then they have to pay it back. They don't have those on hand. That's very problematic. So I think that there's definitely some people who are very top heavy in terms of equities. And if they need to get into cash, say to stay solvent or just to remain liquid, well, then we got kind of a problem there. We're at all-time highs. It's very easy for the market to pull back. And then the question then comes in is how exposed are some of these countries, banks, nations when it comes to margin, right? I was looking at it, I think 3.5 times the level of margin that we saw in the United States in 2008 is currently what China is experiencing. I don't necessarily know if that's 100% accurate, but if that's the level of margin that we're seeing now because there was just so much money printed in the system, that's a very, very dangerous trade. And I think that things can blow up faster than people anticipate. So the fact that we aren't seeing any corrective patterns coming down in the S&P very much worries me that we are going to see a really bad, I'm not going to say crash, but we're going to see a really bad type of correction that could be faster and a lot more violent than people are probably anticipating. I think you're on mute, bud.
Yeah, I muted myself because my dog started barking. But no, I think it's a pretty reasonable take. And I saw a friend who's very involved in the AI and big data space who retweeted a tweet pretty much commenting on how 6 AI companies' earnings had essentially saved tech from falling into recession numbers. And, that was essentially AMD, ARM, NVIDIA, Microsoft, Apple, Google. And so I think that that is a pretty good call out, right? Because those are 6 companies, all with massive valuations, who all serve an important role right now. But it's not necessarily accurately reflecting the sector as a whole or the economy as a whole. So I think, that's one of the things where, you know, it's good to have a macro look at things sometimes, but it's also good to take a micro look. Because if you get caught up in these averages and medians, right, you're not looking deep enough into what's failing and what could potentially break. You're only seeing at the surface, oh, everything looks good until it doesn't.
Yeah, the indexes are so skewed to this point right now, especially like we said, Nasdaq's really skewed. The S&P is definitely skewed. I don't care what anyone says. You got 7 tech stocks, and the rest are pretty much just the top companies in the United States. But we've been seeing everything slow down for the most part. I mean, we could say that they beat earnings, but a lot of these companies are beating earnings expectations. They're not necessarily being profitable year over year, quarter over quarter, which is really important, especially if you want to see there's growth in the economy. You would anticipate that profits would be growing as well, but they're not. That's the issue. And I think that's very misleading for a lot of news organizations and, just people who are, cherry picking what they want to say. So, and again, I think sometimes the truth hurts. Both, sometimes it affects your rationale in the short term, but it also affects your rationale in the, macro view. And things do take longer than to play out. But I do want to talk about something that happened yesterday. It's a guy that we all love and know, Mr. 46. I think he's 46, straight from Scranton. It's really interesting right now with what's coming out and where we are in this market. And I think a lot of people are very in tune with the fact that nothing bad can happen. It's an election year. I've known that some of the worst years in the world have been election years, right? 2000, absolutely terrible. 2008, terrible. And then 2020, terrible. 2024, who knows? I think 2024 is going to be wild. Let's put it that way. I'm not sold on the idea that anything that we are anticipating is going to be anything that we see once we come to the end of the year. The fact let's put it this way, I didn't expect the narrative to switch really this quick on Biden to the point where it's like, is he competent enough to be operating? And it was kind of a quick shift, I think, too. And now we're starting to see a lot of, news organizations even question it and show some of his gaffes. And that's why I kind of led with the opening like that. And it's like, does this change the game that people are saying for 2024 that, oh, no, they're going to keep the market up for 2024 for Biden? Because if they do, let's say worst case scenario, and I say worst case scenario, meaning like most volatile thing that happens is Biden's not president by then, or he announces that he's not running in 2024 and they find a replacement, right? That's the thing that we're going to keep an eye on. If Biden is removed from that situation, does this affect the narrative of, oh no, nothing bad can possibly happen in an election year, right? Because the incumbent doesn't want it to happen it that way. But at the same time, it's like if things do fall bad enough and the person who they choose to replace them on the Democratic ticket ends up being critical of Biden, is this just a clean slate? No different than what we saw with Bush, McCain, Obama back in 2008. So it's really interesting to see kind of the narrative that could be forming. I don't necessarily know if it's going to be, but I do think that the expectation that this market can't drop in an election year could vastly change in a minute's notice. I think that's just the key thing here from what's happened. Um, you know, I texted you and Jay Webb yesterday in the group chat, and I was like, there's a possibility that this could happen. I don't know if it's gonna, but there's a chance that we could see some shakeups in the system, and it's just like maybe this crash or maybe this correction right before an election is kind of like the clean slate, and it becomes this narrative of old versus young, right? Biden's gone, Trump can't get elected, and then it's kind of like, well, maybe we need someone younger so we don't get something like this ever again to happen. So just my thoughts. I know you probably have more thoughts than I do on this, but love to hear them.
Yeah, I think, I think it's interesting. Like, I never really expected Biden to run for 2024.
Same.
My assumption was always that he was eventually at some point going to be phased out and put forth with a more suitable candidate. I had no idea who that would actually be. But right, because this has been a growing concern, as far as his mental capacity and ability, and so I think that's part of the massive shift. Is what was a rumor has now been essentially confirmed by the special counsel of the DOJ. So I think it's probably going to be something that both parties have to react to very swiftly, in order to kind of make their case gearing into the election. So I think it'll lead to some interesting outcomes. But to your point, I think it definitely adds a wrench in most people's thought of there can't be economic instability in an election year, because we don't know, in past years, people have had not necessarily absolutes, but accurate guesses of if this person wins versus this person wins, here are potential scenarios. I think since we don't really have that anymore because it's kind of hard to use Biden in that placeholder, and I'm not as politically adept to say here are the most likely Democratic Party candidates, and I'm sure there probably are people that are starting to plan and look at different outcomes already. But to me, it's like there are too many questions up in the air to be like, with even above 51% confidence, yes, this is going to be a stable year, because just the past 4 years, I mean, what we've seen COVID, we've seen civil wars all over Asia and Africa. We got Israel, Palestine, we got Russia, Ukraine. We just had the Tucker Putin interview where, we got history lessons and we got, accusations left and right. Who would have thought the polls were responsible for all the world's issues? I don't know, but that's what Putin seemed to think. So, no, I mean, I think we're just living in an even more uncertain era, and that grows year by year, partially because of social media and the rate at which information, whether true or not, can move and be, almost weaponized to an extent. So, yeah, I think it's a lot of up in the airs.
Absolutely. And I think regardless of what happens, if we do get this huge market, and again, I keep saying not a crash because I don't want to be the person that's like, the sky is falling. I see the sky is falling. I don't care. I'll be the guy that's willing to say that. But I think that with what happens, people won't understand the extent of what happened and why it happened, right? I think we're going to be doing this thing of pointing fingers and blaming people, which is, what was the quote from The Big Short? When this is all over, people are going to be blaming poor people and immigrants. But at this point, it's going to be just people blaming people that they are told to hate. I think at this point, they're going to blame old people, which will be Trump and Biden, which I don't think will, result in either of them getting, it could be a point where just neither of them are president too, right? I genuinely think that that's a very possible thing if something were to happen regarding the future of the administration's campaign, whether they decide to run or not. It's going to be interesting to see that. But also, people are just not going to understand a lot of the issues that are going on in the world and how they impact the monetary system. The banking issue is very, very cautious, something that should be treated cautiously, I should say, or tread lightly with it, because that's a system that's ready to go at any given day. And the thing is, there's no resolution for it, right? I think the resolution would have been decisions that were made 15 years ago that, are putting band-aids over bullet wounds to the point where, maybe we could have fixed the issue, but the issue has never been resolved. And the answer has always been to pump liquidity into the system. And now we're at such a restrictive rate. We haven't seen these rates in such a long period of time. And then now that we do see them, we saw them after a 0% interest rate after COVID. I mean, this crash probably should have happened back in 2019. We got the one in 2020, but that was quickly reversed because of liquidity, right? They injected so much of it, and they just made the landscape for borrowing became so easily that banks and all these other institutions are able to borrow at, pretty much zero, and it was free money. And they fucked up when they invested that money and then the rates went up. That was the issue for a lot of these banks. And now we're starting to see that with commercial real estate. That's also becoming an issue. It seems like that one's even picking up more steam in the past few days, past week. Again, I still think there's two banking issues there, but it's going to be really interesting in 2024, right? I think that there's a very real possibility that if the market does decide to go, it could go, given some of the developments and the narratives that are coming out regarding what we got yesterday on Biden. And also just, I think it could be a 2008 type of thing where it goes right before the election and it's just a clean slate for whoever comes in, because the two people that are running right now have the most exposure to this crash that is probably going to come, and this economy that they've orchestrated, right? You got Trump, you got Biden, and you got Jerome Powell, who's been there for two crises, maybe a third one too. So I think that's what we're going to kind of see moving forward. But yeah, we can move on from that. I just wanted to touch on that because that's something that I'm definitely going to be thinking about going into March and onwards into the election year. I'm going to pull up the Nikkei. move from America to Asia because we are very close to getting a double top on this, right? We're only a few percentage points away from all-time highs. I think we are roughly a little under 6%, about 5.75, 5.82% away from all-time highs. And the issue is here that Japan is threatening, or the Bank of Japan, I should say, is threatening rate hikes. And we talked about this a little bit yesterday, how no central banker wants to make a move right now because they don't want to be the first one. It's going to be out of Asia, I think. I think they're going to be one of the first. It's either going to be Japan or China that makes a move first. I would more likely think it's going to be China before it is Japan because the issues over there are just so overwhelmingly concerning. And we saw yesterday that Mexico is also the United States' top importer now. We're importing goods from Mexico more than we are from China, which kind of shows you that the issue isn't fixed based on throwing liquidity at the problem. It's based off of demand, and it's a lot cheaper. It's a lot faster to get goods from Mexico right now, and China's just suffering from that 100% because now there's no demand coming in. The factories are starting to close down, lose jobs, and that doesn't help consumer prices go up either because people are just spending less because there is less money, right? So it's all interconnected. But with Japan here, I'm waiting to see what happens when they do rate hikes because eventually they will have to do it. The question is, does the global deflationary problem hit them before they get a chance to? Possibly. Either way, though, this is pretty much the same setup as what we got back in 1989. The only difference here is that they raised rates back here and they haven't done it yet. Everything else is the exact same. It was a speculative bubble, which we got here. It was a sharp increase, and it was a period of inflation was getting out of hand in Japan. So there's only one factor to that that's really hasn't been reached, I guess, in the Japanese economy, and that is interest rates going up. So that's going to be interesting to watch. And again, if we look at this on the monthly, it's almost completely overbought. Question is, how long is this going to drop for? I don't necessarily know, but I think it is going to be one of those things where history might repeat itself. And the structure for it, spanning 30 years is this ABC corrective pattern. It's going to be interesting to see where it ends at the end of this. So 30 years here, maybe 60 or 45 to 60 years by the time we get to the bottom of this. I'm not saying it's going to be all the way down here, but eventually it's going to get to some point where we are going to probably see this be a flat correction if all this is a double top here. So that's going to be interesting to see out of there. China also dealing with the holiday, Lunar New Year this year. Man, I'm definitely having tons of gaps today. But yes, the Lunar New Year, the exchanges are going to be closed for about a week or so in Shanghai. HSI says it resumes trading on Wednesday. That'll be interesting to see. So Tuesday night, if you're in the States, Wednesday morning in Asia, we should see the Hang Seng start trading again. Interesting to see what this brings. I'm looking at this pattern, and I do think that this ABC corrective pattern's done. So I would anticipate that we have another 5 waves down. Question is, do they allow that? And if they do, how short-lived does that fix? Pretty much keep us above this trend line, this historical trend line. I don't necessarily know. I think this is still a dangerous level here, and I think a lot of people are over speculating. You look at the daily; it's gotten overbought really fast. But when it does come to the downside, it can't stay oversold for a period of time. Everything's fairly elevated right now in China and the other indexes. This is the Shanghai Composite. And then we look here at the CSI, which is, like I said, the Russell 2000 for China. Everything kind of bounced here. Now, everything's going to be kind of dark and quiet because we're not getting any, there's not going to be any government data that's being released in this period of time while the markets are closed. We'll probably get January and February data in March now because they're just going to combine it. I'm very curious to see if there's anything behind closed doors in Asia during this holiday that regards trying to fix this situation, regarding maybe even talking about the PBOC and rate cuts, or even just if there's anything that's going to impact the future of Evergrande too, right? I think a lot of these conversations are probably going to be had when there's no coverage of it, just to protect the markets and at least the sentiment of it. But eventually, these things aren't going to continue to be able to hold this market up. Like I said, they're an export economy. They're not doing that necessarily as much as they once did, and jobs and people are unemployed. Jobs are being lost. The economy's slowing. CPI continues to drop. It's got to get worse before it gets better, and that unfortunately means rate cuts for the PBOC. But that probably sends shockwaves throughout the rest of the global economy. And that's kind of the reason why we'll end up on Bitcoin here and Coinbase here right now. But it seems like that's kind of the way that we're going, right? Got Bitcoin pulled up on Binance. I probably shouldn't even do Binance, but whatever. We'll just keep it on there because CZ's not in jail yet, allegedly for the things that he's done. But here we are. Bitcoin just kept shooting up, and I was concerned about this wave two. I wasn't sure if this is a wave two, a three-wave move here, and we talked about this yesterday. A, B, C, or if this is something worse, which I think it could be, which is wave one, wave two, wave three, wave four, wave five. But that doesn't necessarily make a lot of sense from this wave five down here to go into another wave five. That doesn't make any sense to me whatsoever. So I'm interested in seeing if this is something I'm missing on the larger macro scale. I do think that this is going to be a huge resistance rate here around $49,000 to $50,000. If we do get that double top, scenario where it is just distribution. But if we look at this on the daily, like I said, 195 on the daily, stochastic RSI, 3-day looks like it's getting close to overbought once again. I haven't checked the weekly in a while. Let's see how that's doing. Weekly's completely
on Coinbase. It's over on Coinbase. The daily's overbought, and the RSI just started going into overbought territory.
On the 3-day or the weekly?
On the daily.
Oh yeah, daily it's overbought. Yeah, it's overbought on all of them. Yeah, this is 195. This is it's gonna. I think we are gonna probably go for that 49K. I hate to say it. I didn't think it was possible, but again, that's why we didn't make any definitive calls just yet, because we were waiting to see that pattern play out. The fact that it's up $2,200 today. Yesterday it was up 961. Day prior 1,200. They're bidding it. I do think a lot of this does have to go. It goes hand in hand with a lot of these exchanges that are some of these companies that still have tons of Bitcoin, and this is just distribution 100%, probably anticipating that there is going to be some headwinds in March, and also the liquidity thing too we talked about. But I don't necessarily see this being something that's going to take us into a new bull market. Again, I think that the all-time high, I would like to say the all-time high was the spot ETF, and it is very possible that we could retrace here and just go back down, but I do think that we are going to probably go up higher than we wicked up, which is $188. I think we're probably going to go up higher than that, so probably closer to that 49 or even a little bit higher. So I do think that the spot ETF Bitcoin, this thing that we have right here is going to mark in this general area the top of this move for the cycle, at least for this B wave that we were charting since November 2022. There's a good chance that we're going to see probably that move to the downside somewhere once we put in that local high. Now, the interesting thing is here, say 40% is the level I think you and I, J-Web, have all agreed on is Bitcoin's having. What happens when it retraces? Let's say from 50,000, where does 40% take us? Takes us right around here to 29,000, so just under 30,000. So, we had a bit of a scare here after the ETF had a sell-off. Question is, are people getting bullish here? And it's just, switching hands. And the next thing you know, we're going to go through that ride, but this time even worse, because now the structure's over and now we're heading to the downside. Got to get to that 40% retracement. And I was saying yesterday how we have about a year or so before we get to the Bitcoin bottom. That's just my personal opinion. I do think that we could see some moves really violent to the downside. Yeah, but I do think that over time, once we get like a solid formation of a bear market bottom, I think it's going to look something like this, right? Back in 2019, that'd be more of like this period of time where it's just flat trading sideways. When we get these, violent V-shaped recoveries and stuff like that, I don't buy that the market cycle is over 100%. We definitely need people and volumes to drop significantly, and for sentiment to be pretty low for us to consider it a bear market bottom. And that's why I do think that right now people are getting a little bit, excited about Bitcoin's price going up. Even if I pull up Coinbase, the structure that we were charting on Coinbase has changed a little bit. So let me get rid of. Actually, I'll just zoom in here. I was charting this 5 waves down from this, this wave 5. So we got the first 5-wave move down here. Looks like we had an extended wave 1, wave 2, wave 3 down here. Pretty good move. Wave 4 and wave 5 kind of bottomed out on the 6th of February. But in the past few days, we've had a really good move to the upside for Coinbase. I'm questioning whether we see some price come down, and if we do come down lower than this, 115 level because the daily is getting pretty overbought fairly soon. So in the next few days, if we do see that correction, maybe Bitcoin sell off a little bit in the future. If we do come down, test the 200 EMA on the daily, I do think that this next wave C is going to be lower than our wave A. So that kind of tells us that this is an irregular correction, and then that means that this ABC would be completely done. We probably have another 5 waves down after that. So that's going to be something interesting to see. Key thing for Coinbase is when this correction does happen, if it goes lower than this origin for the B wave, that tells us that the C wave won't go as high as the A wave. So that's going to be something interesting to see how that plays in hand in hand with Bitcoin's price. But that's pretty much what I'm seeing on the crypto front. Anything that you want to check out or want to add? Got a little bit of time here.
Nothing major right now. There are a few new gaming tokens that I've been exploring, some that have been existent for a while, and I'm just now finding my way to them, and some other ones that have popped up soon. So maybe touch on those sometime next week or the week after. But no, I think that was a good way to end the week.
Yeah, absolutely. And one last thing before we end, I do want to just, I put it in the show notes. I want to just show this real quick. This is the DXY. Now, the DXY is really interesting here, right? We're talking about October 2023 is when it started crashing as the market started going up insanely high. The equity market, it was just like an absolute reversal. DXY down, equities up, is what it is. But we've broken out of this parallel channel, and now we've had a really good move to the upside, and we're kind of trading somewhere around 104. And the equities are still going for all-time highs. But the question is, why isn't it going down like it was back here in October of 2023? A lot of people went max short on the dollar. It's really interesting to see how the equity market and how Forex is reacting and how this is keeping the dollar relatively strong here. We're going to get probably a golden cross here on the 15 to 200 if we can remain above the 200 EMA here. But I think that there's a good chance that going into March, going into the banking crisis, going into all these things that are, people aren't pricing in yet, there could be a shock to the system where even a slight sell-off sends the dollar a lot higher, right? And that type of panic, even though people like to say gold is, the safety trade, I don't necessarily agree. I think gold is more of the cautious trade to make sure that, hey, this is uncertainty. I just don't necessarily know where to put my money. Maybe it's best if I just put in gold for the time being. Like I said, we saw the height of gold back here in May of 2023, which was post Credit Suisse and all those other banking crises. So I think that gold reacts a little bit slower to kind of panics in the market. So if we do see some type of sell off, I do think that the dollar has a really good chance of going for nice, wave 3 to the upside, right? And I'm talking like maybe 107. If it overextends that, then we're probably going towards 108 to 109. And, that's definitely going to affect a lot of things moving forward. It's going to affect the VIX, and it's also going to affect a lot of the other world currencies. And the big issue here is, and I'm tying this back to China, is that the yuan is getting crushed every time that they print money. Right. Every time that they print liquidity, it is just absolutely destroying their currency. And they can't let it get to a point where their currency is just devalued so much that they're seeing problems, not to the likes of Argentina and, Venezuela, but definitely similar problems to the point where, hey, the yuan is not as strong as it once was, especially in the global trade, setup. So I think it's going to be really interesting to see how the PBOC, the president, see this problem if they can continue moving forward and hurting their Chinese yuan the way that it currently is being hurt based off of all the printing that they're doing to inject liquidity. But that could, impact the dollar. But for the time being, I think the dollar is remaining strong because of that. So it's going to be interesting to see going into March after the new year ends and we get the markets back open, how some of these Forex currencies react, because they're kind of signing the fact that people, despite all-time highs, are still believing that these currencies are worth holding on to for the time being. As in, they probably have some bets that maybe this has some room to go up in the ups, in the coming days, weeks in the market. So, sorry to overextend the show by that. I love the dollar, and I think it's really interesting seeing how this is going to impact the markets and especially the banking system because at the end of the day, there's only one thing that pays off the debts, and it's not going to lose value, and it's going to be the U.S. greenback. It's a fun week. I had a great time with you the past few episodes. House, we got to have you on here more often. You got to get a you, me, and J Web show. Hopefully, when the banking crisis kicks off,
man.
It's gonna be fun if we do a banking crisis one and we do like the primaries and stuff like that, and just see how the markets react. I think that'll be fun.
Oh yeah.
And again, I'm making it sound like the banking crisis is coming. Like it's going to happen on March 11th. We don't know when it's going to happen, but there's signs that are pointing to smoke, and where there's smoke, there is fire. So we'll leave it at that. Have a great weekend, everyone. Also, Leroy Jenkins, the guy that's been in the chat or in the comments recently. thank you for watching. Appreciate you joining us. Chris, thank you for also being here all the time. Ace, Randy, love you guys being here. We'll be back Monday. Not sure if it's me and J-Whip or me and House yet. We'll let you know. But other than that, everyone have a great weekend. We'll see you all next time. Take care.
Take care, guys.